Hello, everyone. Welcome back to the Prospero AI stock market live streams. What a crazy day we are seeing in the markets. Green, green, very green across the boards. We got the announcement that I would say shocked the stock market. I guess the upside today. QQQ was up as much as 9%. It's slightly drifting back lower now, only up about 8.5%. But we got the 90-day reprieve in stock. In tariff announcements that sent the stock market higher. The SPY is up over 6%. The Dow Jones is up over 5%. The Russell is up also about 6.5%. VIX down 30% today. So pretty insane move in the markets. It's going to be obviously a large part of our discussion here today, reacting to all this, all the different outcomes, all the changes, the whipsawing, the volatility we're seeing in the markets. Let me check out Bitcoin, see what Bitcoin's at, how much it's moving. Bitcoin is up 9%. So massive, massive moves we are seeing across the board. As we get all of our viewers in here, welcome in everyone. If you're a typical viewer of our streams, welcome back. Please like the video. Let's see if we can get double-digit likes on YouTube and maybe even Twitter today. Big stream, a lot to cover, a lot going on. Maybe we've seen the bottom in this recent bear market. I think we officially made it a bear market just this past day on Tuesday. Mario Mech saying, afternoon, don't know how long it will last, but today is a good day. There you go, Mario. Very, very green today. I think Prospero, SPY, and QQQ net option sentiment was starting to really increase too when I was talking to George right before the stream. So let's take a live look at it. The more strength we see in the SPY and QQQ net option sentiment, the more confidence we'll probably have in this rally. Hey, Patrick, welcome to the stream. Your first time here. Well, it's a great day to watch streams. Obviously, we got a lot to cover. So SPY net option sentiment is now at 17. And as you guys know who follow along, it's been pinned at 0 for the better part of the last month and a half. So good to see that above the flat line of 0. And the QQQ net option sentiment is all the way up to 39, which I believe is almost a bullish level in its own right. I think 40 is the bull bear line now. So big increase in QQQ net option sentiment. So we're going to cover the 90-day pause, 10% tariffs still in place, 75 countries came to negotiate, China tariffs still at 75%, 125% actually raised. So still tensions there. So so much to cover, so many questions following it. Now we have this 90-day window. What happens if there are no good announcements throughout that 90 days? Are we headed for another meltdown if that is the scenario? Now the market has the experience of the April 2nd tariff deadline that hit the market so hard. So what will round 2 or round 3 of this tariff turmoil bring? It's insane to see the Mag 7 moving so quickly. All those stocks moving 5 to 10%. Today, 20% moves on a daily basis. The overall market's moving 10%. The market's kind of feeling like a casino at this point. Everything's moving like a meme stock. So we're going to ask George, like, how is that even happening? What does that mean? How much money is changing hands currently? What are the dynamics that are leading to this? Ryan Hansen saying, what up, boys? Anyone buy Tesla or TSLL call options? What a ride. If you did, you picked a very, very good day. Tesla is up, I think, like 20% the last time I looked. Let's see where Tesla's at now. Tesla is up 18.7% right now, over $260 per share. So I'm sure the options, call options are doing quite well there. I'll also ask George, is it a good idea now to buy the stocks that got the hardest hit over the past week as we saw, I think, true capitulation, you could say? It is kind of crazy, though, because like the stocks that got hit so hard are also the stocks that are moving 20% today. So it's like they're making the move so quickly. Like, is there even time to think about this stuff? It's like, or has all these moves already happened? So it seems like everything is moving so quickly in the market nowadays. Well, I'll ask George, Did Wall Street actually call the shots in the end? And the panic, the weakness, the sell-off we saw, was that the factor that led to the switch up in this tariff and getting that announcement today? And is Wall Street truly the boss? And now that we have this tariff resolution, at least in the meantime, what is going to be the driver of the markets on the daily basis? Is the AI trend going to come back, or will it be filled with some other thing? It's been tariff, tariff, tariff news every day, seemingly for the last since April 2nd, so a week ago. Obviously, it was a big part of the markets before that, but since then, it's been basically everything. So, what is going to drive the markets going forward over these next 90 days from here? Can anything besides, like the macro geopolitical Trump situation, drive markets on a daily basis? We do have one stock specific story to cover today. Most of our topics are all surrounding the news we got, but we're going to update you guys on this company called Isomorphic Labs, which is a spinoff from Google DeepMind. And they have some pretty cool tech and just made an announcement that they're going to start doing something today. So we'll let you all in on what they're doing. I see George is hopping on into the live stream. As always, if you have any questions about specific stocks that you want us to cover on the stream today, hello, George. Welcome into the stream. Feel free to comment them in our chat, and we will be happy to take a look at their signals in Prospero, tell you how they look in our signals, or anything else you want to have covered on the stream. But without further ado, we have to get into the market. George, pretty insane day. I don't know where this ranks in terms of memorable days in your investing history, but it has to be in the top 10, if not top 5, if not number 1. Like, just the swings we are seeing across the board on a daily basis, from peak pessimism to now the market ripping, Prospero signals moving for the QQQ and SPY. Obviously, we have so much to get into with this 90-day pause in tariffs and whatnot, but just your reaction to the market today and over the past couple of days, like the swings that we've seen.
Yes, first of all, welcome to your first stream, Patrick. Hopefully it's the first of many. Definitely the craziest day. I mean, the craziest couple weeks I've ever seen. I mean, maybe week. I mean, the craziest thing about today, I think, we're going to get into all of the details. But I think the craziest thing about today is that we surrendered about 10% on Thursday and Friday. And then, looking live, we're up about 8% today. And that just on the surface doesn't really make any sense, right? Because before, people were concerned that, basically the tariffs were going to be really escalate a trade war. Now, we still have that trade war escalating with China, but to gain all of that loss back on just a delay without hearing any, solid things. We've heard other countries are negotiated. We haven't seen anything solid or complete. I mean, that would be a different story if we started to see a lot of these, deals getting closed. But yeah, it's a very scary, kind of volatile time in the markets. And it's not really easy to make sense of. I think what we're seeing now is a lot of kind of algorithmic momentum, trading. And I think that's what we saw. It's going to be interesting to see what develops. Already our QQQ, SPY, net option sentiment numbers are looking very good. So yeah, I think it's one of the more interesting times to be learning about investing. I mean, I'm still learning from this market. I'm playing, new plays. So yeah, it's very, very interesting.
So I see our comment from You Mad Bro. We'll get to it in 1 second. Let's just hit this main story of the day first. The 90-day pause that was announced just a few hours ago that just sent the markets absolutely flying. So Um, you were saying it's kind of a little bit confusing about the reaction we've seen, how aggressive it's been. So what we got was 10% tariff still in place over this 90 days. Trump said that 75 countries came to him to negotiate in the past week over the tariffs that he announced last Wednesday, actually on April 2nd. But we are still seeing as well a 125% tariff remain in place for China in the meantime. So, although there was an easing of tensions for most of the world, it's kind of only escalated for China, which is the biggest factor in our uh, in who we deal with. So, you said you were surprised by this move, but like, what do you think's happening? Is it short covering? Is the market reading between the lines? What's going on there?
I mean, I'm surprised by the extent of the move, not the move itself. If we're talking about the amounts, right? If we're talking about a kind of a risky tariff market creating like a 10% decline Thursday, Friday, in one of the worst 2-day spans in history, to get all that back in one day on just a delay, if it was, it would make tons of sense on the amount of basically erasing that. If, the message today was, we got deals with everybody, we're canceling the whole thing. But with it escalating with China, obviously we still buy a lot from China, and then just the pause, right? I think this is kind of a surprising reaction to the extent that things have recovered. I mean, I think it makes tomorrow a lot more interesting. Do we see a little bit of a pullback? Do we see another, 8% gain? Because everybody thinks there's kind of better times, negotiations ahead. I don't know. But yeah, it's certainly interesting.
All right, so let's get to Emad Bro's question. He's asking about ENVX stock, which I haven't looked at recently, but I'm sure with the market, it's gotten hit pretty hard. It was one of those higher growth stocks, I think. So maybe we'll check it out in the Prospero signals, saying he's been stuck in it for a while now.
I mean, it looks pretty good right now. I don't know like where it's been. Net option sentiment is looking good. Upside is looking good for a smaller cap stock. It looks good. I mean, I don't think, I mean, it's not any, world beating Prospero numbers, but it's good enough that like I'd say, especially if, the macro economy stuff gets more settled, I think there looks like there's some good days ahead for it.
So we have this 90-day window now, but we have the history and experience of the market seeing how weak the tariff news was when it actually happened. So now let's play out the next 90 days, like the scenario where these negotiations go well and tensions are eased versus negotiations don't go well, maybe there's no news, and then we have this deadline looming again. So can we go through those two different routes and how you think about them?
I mean, first of all, I think what happens with China is very important. So I don't think it's just like deals or no deals. But I think if we don't, there's kind of been this promise of, we've heard that Taiwan is willing to do 0% tariffs. We've heard that Vietnam is willing to do 0% tariffs. I definitely think, if we're looking at the bull case, these deals, potentially, I think the most bullish we could see is a deal with Europe, also including higher tariffs to China. Now that would start looking like, where it really looked like this morning we were losing the trade war. Now it's just kind of more of a, hey, let's see what happens. If we started to get these 0% tariffs, if we had a deal in place with Europe that included kind of them ganging up on China with us, I think that's the bull case. On the other hand, like you're saying, if weeks start to go by and we don't make any deals with these countries, especially the ones that are saying publicly that they're willing to do 0% tariffs, so we can't take that and turn that into a deal, I think we're looking at the best case, a volatile market. But if you look at consumer confidence in all this, deals or no deals, like I think the cost of goods is going to be very important. If people start to see their prices going up just because of what's going on in China, I think we could definitely start to see a lot of that lower consumer confidence leaking in to the market again. And I would say it. Watching all this, I think we're going to talk more about like the players and like what really happened. But I think watching all this, if there's one conclusion that you could draw, it's like there started to be a lot of pressure from the public. There started to be a lot of pressure from a lot of hedge fund managers, billionaire GOP donors, right? I think the pressure was all mounting because the confidence was getting so low. So I do think this was important to restore some confidence, create some bullishness, but I think that could evaporate if we do not see kind of real progress from this pause. Because we heard a lot about countries are coming to the table. That's why we paused. But if that doesn't happen, it might start looking like to us and the rest of the world that we paused because we needed to save our economy, like what was happening in the bond market. There was a big sell-off in the bond market. We've talked about it. That was driving our yields up. That's a lot of pressure on our economy, and I'm sure a lot of people were upset by that. And either through Lutnick or trying to contact Trump directly, I'm sure there was a lot of donors that were asking things.
And Mario commented, there's a Chinese curse. May you live in interesting times. And the times are certainly interesting. And I had a question kind of talking about the point you were just getting at was, did Wall Street call the shots in the end? Because we've been talking about how maybe the reason the sell-off has been so aggressive is Wall Street was kind of angry that they were losing control on the market. You always kind of talk about how like they like to have control of the market direction, and now Trump is kind of ceding that control. And I've noticed recently that I think the market, or at least the way the media portrays it, is that the market really trusts and likes Scott Bessent. It seems like whenever he speaks, the market feels a little bit of ease, kind of building him up and hoping he takes a larger role in the tariff negotiations going forward. And I know he has history with like Stanley Druckenmiller, and he has a whole career in finance like to back it up. So, how do you feel about Bessent? Do you have any opinions on him? And then the pressure that Wall Street put on Trump and the administration with the drop in markets, do you think that was the final straw?
Yeah, I mean, I'm not sure it's like what it might have been just as much as like the actual, I think the CEO of Home Depot, I forget his name, but he's a major Republican donor. Like I think just as much as the wealthy people that were affected. I mean, I think you just have a situation where I think there's a lot of pressure on the midterms, and any Republican, senators, House members were probably like applying as much pressure as they could to have a solve here because it was getting ugly, and it was getting ugly at like constituent events and things like that. And so yeah, that's why it's hard to say, right? Like it was getting to a point that you really had to um kind of consider um, doing this, whether or not you were making progress, and that's why we'll have to see because I'm like we've heard Elon Musk come out and say that you can't believe basically you couldn't believe sometimes he was gonna get things wrong. Then you kind of have this leak and that there was going to be a pause, and you heard Trump say fake news to that, right? But obviously that wasn't fake news. They were considering it. And I don't think they have to validate it, but I just think sometimes it's a bit of a struggle to trust people. Like, I'd love to be able to trust that there's deals being made, but when we've already heard this week that something that was going to happen was really being considered was fake news, like, how do you not look at anything that's said with some scrutiny? Because they had to do something. This was getting very, very ugly. So whether or not there were progress on the deals, they really had to do something. And so, I hope, I hope for all of our sake that there is progress, that we see it. But, I think it would have gone further if maybe, more specifics on what deals, how close they were offered, as opposed to this that just looks absolutely like a way to stop the free fall of the markets.
And it seems like we're going to have to watch every Trump tweet going forward because there was two different tweets this morning. I think the first one, it started with "Be cool," which is my vote for the title of our newsletter today because Trump was talking to the investing world and saying everything's going to be okay soon. America's going to be bigger and better than ever. And then the other one, I don't know if he usually like signs off in his tweets, but he finished it with like DJT, and people were saying, "Oh, that's a symbol of his stock." Like, read between the lines there. So obviously, now that we've seen this announcement today in the market move, he was hinting at what was going to be said. So, are you going to be paying close attention? I mean, people already paid close attention, but he really kind of, without saying it, said it this morning of what was coming.
Yeah. I mean, it's definitely it's hard, like, it's hard when we're seeing stuff like that, right? And it's hard when institutions do it. It's hard to watch politicians do it. It's just really not the way the markets were supposed to set up. Where someone with, certain information is, leaking it ahead to certain people, right? Because, I mean, I think where it's just like, it's one thing to say, don't panic, right? That's a nice general thing that everybody can use. But when you're starting to say to buy a stock that you're the largest shareholder of, I don't know if he's the largest shareholder, but a huge beneficiary of, and it bears your name, it's just kind of like the antithesis of, what the market was created for. And I understand, look, there's tons of corrupt Democrats. There's way too much corruption. There's way too much stock trading in the government, all of it. But, like, it's kind of annoying to see someone come in and say they're going to drain the swamp, yet kind of engage in very overt behavior that you'd associate with the swamp.
So the stocks with the biggest China exposure, still after we got this, remaining in place 125%. I'm looking at Apple. It's now up 14.5%. What a wild world to see a $3 trillion company up that much. But then you also have Tesla up 20%. But these tariffs are still in place as of now. So are you nervous that this is like a one-day move, especially for those stocks? Some other ones like Starbucks and the huge China exposure stocks, that this could be like faded. Do you have more confidence on other stocks? Like, I know there was a lot of stocks that have exposure to Vietnam, like Nike and a lot of other retailers. Do you think about those case by case, or are they all kind of one blanket?
I think you just have to watch what's going on in the signals. I just like, because even now QQQ net option sentiment's down 21 from 39. I think you got to watch what's going on in the signals. That's what we built them for. Who knows? Like I'm saying, I could see it going up another 8% today, or there be just a big pullback because people are wondering, people are wondering like, oh, like, where are these deals? Maybe we should take these gains because we don't really know if there's more good news coming after this announcement, or if things escalate even further with China, right? I really think we need to have these answers before you're thinking about any long-term positions.
So looking at the QQQ right now, it's now up over 11% today. Can you break that down a little bit? Like that doesn't even make sense in my brain how that where are the funds coming from? Where is the liquidity? Like how much capital does that even take to move the entire QQQ 11% in a single day? How can that even happen? Like shouldn't an index not really be able to move like that? Like we're living in such crazy moment right now, I feel like.
So it's not always necessarily going to be, well, there's a bunch of different mechanisms. I would say the first thing is, where do the funds come from? That's the easiest one to answer, right? All of these people that, and funds that have had, puts on the market, are shorting the market. If you're smart, you basically, especially when you've profited a bunch off that position, you've got your trailing stop losses, right? So when the market starts to move, you get exited out of all these short positions with a lot of profit, a lot of cash to deploy, right? And you are sitting on that mountain of cash. And it's probably good. Then you kind of have your momentum. We're talking about large hedge funds mostly because large hedge funds are what move the market. Then you probably have your momentum. The same thing that flexes you out of your shorts is going to be triggering positive momentum and getting you into long positions. And, the QQQ, like the QQQ doesn't necessarily have to, like, you don't necessarily have to have appetite to buy the QQQ for it to go up, right? There's got to be parity in it. And basically what I'm saying is, like, imagine all of the stocks in the QQQ are going up. People are buying them, buying options, so people have to hedge against those options that have issued them, right? And then um the QQQ is not moving at all, just for argument's sake, right? Then basically algos that are looking for value in the market can basically be like, oh, the individual stocks are, and this doesn't, because this all happens so fast, you're never really going to be able to see a pricing disparity between those two items. But that's the kind of thing that happens in milliseconds in the market, right? So it doesn't necessarily, like, an investor that might have wanted to buy tech stocks could very easily buy the QQQ just because of the value. But and like it's all happening very fast. But yeah, I mean, I think the other thing that we probably saw is, there was overnight buying in the bond markets in Asia and Europe, a good amount of it. Then there was, that's why I always recommend, well, it depends on what you're doing, but I always recommend that the TQQ, if you're in SQQQ, you have a 20% stop loss. And then you keep getting your longs. But there were clearly people starting to bet on this event, and maybe smart people paying attention to Donald Trump's tweets, even if they weren't in the know, they might have said, okay, you did start to see. I was definitely looking at the market today and saying, things escalated with China. Why isn't this going down more than it is? I was actually like a bit puzzled by that. But I mean, I probably closed one too many positions this morning, but it was pretty interesting. I probably shouldn't have closed SoFi, but it was pretty interesting. We ended up doing pretty well just because what I was looking for, I had some high risk longs like Carvana and Broadcom, and SoFi was, SoFi's up also, I think, close to 20% today. So that's the one I maybe shouldn't have closed out. But the only reason I did was because today, until this news came, should have been a more negative day. So I was hedging, but it shows as long as you're, I was 4 long, 7 short, and I'm still up on the day. I did add some timely longs. But yeah, it shows that you kind of always have to have a plan. I was actually going into today. One of the reasons I added SoFi at close last night is I was just like, well, this does all seem too doom and gloom. I would think something has to happen. I thought that might be some sort of an agreement with China. And that's what I was looking for. So I was taking kind of higher risk longs as well as the shorts. Higher risk in terms of they would go down if there was no deal, but they'd go up a lot if there was. But yeah, it's crazy to see all this play out, and there's a lot of reasons for it. And unfortunately, you really have to lean on technology like Prospero in markets like this, because the people best suited to win in these markets are people that that have high frequency traders, right? Because the minute this momentum started to going, even before the news came through, those high frequency traders were exiting positions, getting into others, just like we said. So, the best way to catch up to them is, to use the Prospero signals. And yeah, I mean, basically what I will be doing until further, until, new data arrives, is I'm basically going to be like either have long or short. And then basically I might, I'm flipping a little long now. I'll see how the numbers end today. But the shorts that I have, even if I'm more long, will kind of be shorts that will be big winners. If there's bad news on tariffs, even if they're big losers, I expect to cancel that out with my longs. So we're staying pretty hedged. And for example, I think we're up like 5% today, but I would way rather do that than, with the way net option sentiment was, I could have easily, just been like, 8 short and 2 long. I've certainly been that long versus short before when I'm bullish. And the signals were extremely bearish. But in this market, because the White House can move things so fast in the blink of an eye, you really have to stay well hedged and be willing to take like rather large losses on whatever's on the other side, and hope that your gains on the larger long side in this case offset that.
So when I saw the news today, I was like, "Oh, exciting!" Like I'm gonna ask George, is it time to buy the dip in the hardest hit stocks? And one that like came to my mind was AMD. Obviously, we covered how it was dropping even before all this, and then when all this stuff started, it was hit even worse. It was as low as 76 this morning, and now it's at 96, up 23% on the day. It's like, well, is it really hard that hit that hard anymore? Like such a reaction. So my question is, with an impulse move like this, are you going to be looking tomorrow to see if there's true strength? Like after a move of this magnitude happens, if AMD can be green tomorrow or red tomorrow, or any other stock that's making a 20% move today, is tomorrow the more telling day, whether there's actually true strength or not? And today is more of just an impulse reaction, maybe positioning very bearishly, and it's like short squeezing or whatever.
Yeah. I definitely think that tomorrow is going to be more telling. Like this is just like circuit breakers, momentum trades like happening, and it's up to 9%. I don't know if I've ever seen. I mean, it's probably happened, but I don't know if I've ever seen an S&P 500 up 10% day. Like I don't really know what the catalyst would be for that. That's just that positive. But yeah, I mean it's crazy. That's what happens with these momentums. Like I think we definitely saw. I think we definitely saw short put positions closing, and almost instantaneously that money getting flowed through into long positions. And it's every like investor worth their salt will tell you that they love volatility. volatility is where you can make money. And today is just tailor made for a high frequency trader, because I actually started to see the market go crazy up even before I saw the news drop. So I don't know if that's like someone with White House contacts saying, some people say it was news out of the bond markets. But it just goes to show you that, you know, not only can you do what I'm suggesting and position yourself well using Prospero, the other thing that you can do is um, do it like hedge funds do, right? Have your stop losses on your short positions, and then have limit buys, ready to buy. Like to your point, like you could have had, an SQQQ trigger out at like a 20% loss, and then kind of do the math there and say, okay, I also want to have a limit buy on AMD if it's up, 5%, 10%, right? So you can set, especially in this market, you can set yourself up similarly to how, institutions think about it. But, it can be very challenging to do that automated of a strategy. Like I don't even do that, partially because I like to share my moves. But partially because, in this volatile of a market, it's very easy. You could very easily be like exited out of your SQQQ. And then after you're exited, it being back down 10, 15% in no time. That's the downside to stop losses. But yeah, definitely think about, having all of your cards in play.
See you later, Patrick. Thanks for stopping by at the stream today. I have a question about the level of volatility that we are seeing. And you're saying, good investors and traders love it. But is it kind of a black eye on the market when it's moving this much? It kind of gives a bit of a casino feel. If people are newer to the market, maybe they've got a bad taste in their mouth now after, losing so much. Now, obviously, everybody loves when it goes up so much, but just volatility works in both directions. The whole market's moving like a meme stock. So, what do you think about that? Is it good, the level of volatility we're seeing in the market?
Well, I don't like. I think we've definitely seen, some foreign investors start to put money elsewhere, um, and I think from that perspective, you don't want such volatility. And I've also seen, some retail investors. It's like some retail investors, kind of expressing like, oh, I finally had bought puts, or like, and puts got really expensive. Um, and then it goes the other way on them. So yeah, I think that um, I think that the way this all looks is not the most flattering for people that aren't in the know, right? Because the more in the know you are, the more access that you have, um, the better off that you do here, and the better off that you can odds make it. But that being said, I think the U.S. market just showing it's resilient is probably, it outweighs um, the negative signaling.
So we're finally going to get to like a single stock specific story, which usually we do more of, but today there's so much going on. But it's our final story of the day. So last call for questions from all of our viewers. We'd have over 2,000 of you in here today. So thank you, everyone. After this, we'll be getting into the model portfolio update. So we'll make live moves. So you want to stick around for that. But let's get to this last story. So Isomorphic Labs, there's a news announcement about it today. It was spun out from Google DeepMind, and which has also made the AlphaFold 3. Um, Isomorphic Labs will now be making that available for scientific research for anyone, as long as it's not for commercial use. And this is the same technology that made discoveries in Alzheimer's that actually won a Nobel Peace Prize. So here's a bit of AI tech that maybe stories like this could come back into the focus, and highlighting Google here. We talk about their tech a lot, although they haven't been able to capitalize it on it. But what do
Yeah.
you think of the story?
I mean, since we've been doing this stream, we've kind of gone from saying like Google has like, has the best R&D, best AI department of any, and they did. I mean, DeepMind was the world-class AI technology. But, as the stream has gone on, and more, like I'm still shocked that Gemini is such a shit product relative to the others. Like, I don't know, like, I don't know if that's like their product people, if that's their AI people. They invented the transformer model. They should be able to do more with it than they do. But at the same time, like where DeepMind, Google Mu Zero, if you're ever really interested about like what some very advanced, um, you know, game playing, game theory technology is, like it kind of makes LLMs look like child's play. Some of the stuff that these more decision making versus generative um, AI models. But yeah, I mean, I still think if you're talking about like solving major problems like in healthcare, I still think that DeepMind is who I'd bet on. But they clearly have problems fitting their AI to problems that it's not already well suited for. And that's not a great look for Google. Probably one of the reasons it trades, so low relative to the rest of the Mag 7.
I just started thinking, like, why don't all of these Mag 7 stocks that have their own AI tech have like a section of their business that's just like a hedge fund where their tech just trades the market? Like, couldn't that be very profitable for them? I'd imagine if they have the best AIs in the world.
I've asked that to people at Google before. The best answer that I've gotten is that, as a public company, it's not the best look for them, because really the best algorithmic trader would be to take all the search data and email data that they have and use that in combination with AI. They could crush the market. Now, like, especially like that could potentially get them into some hot water with the SEC, especially like the better it did, the more it could. But yeah, like that is a very good question. I do not know
I have a
why
solution.
Google
Ready?
doesn't just like, because at a certain point it's like, okay, maybe people didn't want to use Google products anymore. Who cares? Like running that thing for a year, they could be like the wealth, they could just basically absorb the world's wealth. And the funny thing is, again, like I don't know if Meta or Amazon or whatever, like that they might do that at some point. Maybe there's some a good like maybe there's some like um unspoken agreement between these companies and the government that they won't be viewed as monopolies as long as they don't do things like that. Um, but yeah, they might miss their opportunity. This DeepSeek, the guy that runs DeepSeek, he wants to invest. He's got this crazy AI. He's going to start absorbing data too from people interacting with it. It's interesting to watch, but yeah, like maybe you don't hear me say this often, but your guess is as good as mine.
Well, I have the perfect solution for Google. I think this could work if they add a tier of Gemini or whatever that people can pay for, and then Google pays back out the gains from this hedge fund AI back to the people who are in this tier. Maybe it'll even pay for itself at some point. But there you go. You share it with your users, so it's more friendly appeal to the public and the markets and whatnot. I think that's a good idea, and people would go for it.